So when trading earning setups, there's not always just the bullish setup or the long setups. You also have to learn and understand when a stock is not going to hold its earning gap and give you an opportunity to make money when the stock sells off, or we call it as gap and crap setups. First setup we're going to discuss is Apple. Plan was bullish bias to long as 276 holds, no go under 34.50. What these levels tell us that we would be bullish if this resistance breaks or support holds, and we will be bearish if support breaks or resistance rejects. And we combine these levels with the Ripster EMA cloud system to make a decision: are we going to long something or are we going to short something? So if you look at the Apple, those levels, they gave up right at the open. So when I see that, it's no longer a long for me. I'm not really looking to buy Apple. Many traders would look to buy the dips here. They will get crushed in the first 30 minutes, but we are actually shorting it in the first 30 minutes because when we break the 3450 clouds, we are looking for the MTF clouds as our short targets. It was Friday, so we were buying the lot of ports, short shares. Apple, profit taking short to the MTFs. That was my first guidance to the community, and I gave the first target of 270. We hit the 270, then we went sideways for a bit, and then it curled over the 512s. That's where we get out. And you see whenever it curls from 512, it does push towards 3450, rejects again. But most of the day, Apple was a bearish setup. You could have traded along here, but the main setup was to short right at the open, take it all the way to the target and buy 1010. Did give you a lot of opportunities to short and cover at 269. So almost a $6 per share profit here on Apple. So Amazon was also a gap and crap setup similar to Apple, although it did not give us a lot of range. So it was not like a home run trade, but it was a definitely profitable trade, and we traders were trading options on this one as well. But even if you traded shares, it was fine. So the plan on Amazon was we had a support pivot 248, 250. We had resistance pivot 254, 255. Long over the pre-market highs, gap and crap under 250. As soon as I saw that Amazon broke this 512 and it was staying under this 250s, I knew it's a short. It was no longer a long, just like Apple. You just need to know your levels. You need to know your Ripster 3450 clouds. That's why I told the traders in the morning to gap and crap versus 250 stops. You just put your 250 stops if you were patient enough. You did get $6 per share profit on Amazon short. Our 247.50 puts, they did go from $1.50 to $3, 100% return. If you're trading the $1,000 puts, you made $1,000 there. But even if you were trading shares, it was a decent. Every time it pops toward 250, you short it and you take it down. You're risking $1,000. You could make 3-4 grand with the Amazon share short as well. So that's how you do it, guys. That's how you do your day one gap and grab setup. So next time, anytime the stock is selling off, do not get bagged. Do not try to go long. Find these gap grab setups and make profit with the shorts.
Come to trade with Ripster. Join the community at www.tenettradegroup.com.